Well, I'm sure everybody heard of high frequency trading, and I don't understand how it works to tell you the truth, but I understand this basic principle. If somebody's making out due to high frequency trading, it's coming out of somebody else's pocket. There's no doubt about it. I know there was an example given like it was sort of like Alien versus the Predator. It's not hurting the little guy. How could it not be hurting the little guy? How about, is there just going to be some money that just falls out of the sky and creates money somehow by high frequency trading? Is that what's going on? Because in other words, if somebody, I guess the loser is supposed to be the other predator, right? Well, the other predator wouldn't survive if they were a loser. In other words, common sense, okay? Just want to put this out because it'll spell that, well, I think it's not going to be a problem trying to convince this audience, but I guess it would be to convince any other audience. In other words, high frequency trading has always been the battle, sometimes portrayed as the battle of the big dogs against each other that's not hurting anybody else. But it can't be that way, because if it was hurting one other firm, they would basically be knocked down after a while, and they wouldn't be a big firm anymore. So it is the big guys versus the little guys. In other words, if it's two big guys battling it out between high frequency trading and one's loser and one's the big winner, and it's not affecting anybody else, well, eventually there's only going to be one left standing. So either way you put it, it's either concentrating the power into the hands of the fewer and fewer people, or it's actually the big guys battling it out between each other, but they're also freaking taking it from the little guys, which is really common sense if you real 101 all the way without even get into the the technical aspects of things, because money is not just created out of thin air by high frequency trading. Somebody's winning, somebody's losing. That's all there is to it. Now, it looks like the FBI was investigating high-speed trading firms on non-public information and inside information. But I have to state this. Actually, if you look back to 2001, there's been ongoing lawsuits involving alleged. That's a joke to even say alleged, but just saying that there's cheating going on and rigging in the commodities market, especially oil trading. Actually, one of the ones that brought about the lawsuit was a former head of the New York Mercantile Exchange. So it's not even just like traders and stuff like that. It's actually inside people that really know what's going on. Now, what's interesting is I've read just some hours ago that the CME, the Chicago Mercantile Exchange, actually closed down due to a software glitch. And, well, they didn't really close, but they had to do it the old-fashioned way with, yelling and stuff, with, using people power to keep it going temporarily while, things were brought up to speed again. But I almost look at this high-frequency trading it's almost like an acute thing with, the problem I see with Bitcoin, basically. Bitcoin requires more and more computing power to actually, stay in the game, right? That's one of the flaws to Bitcoins. It's going to require more and more space, more and more computing power to mine the coins and all this type of stuff. Well, high-frequency trading is actually worse than that. It's actually clogging up the system with so many trades going on, and there's actually like brokerage hiring specialized high-frequency trading firms to do their transactions and stuff like that, so you can skim a little more off the top. And what's going on here is basically it's making a whole industry that doesn't do anything provide any kind of productive output for people that people really need, because there's a lot of computing power and a lot of effort and a lot of time and a lot of genius brain power going into just trying to increase the odds on the bet. Basically, they're front-running everything. That's really what happens with high-frequency trading. They see the trade come in, and they get ahead of it, and they nail it. Well, they see the trend, and they can skim some off the top before it actually hits reality, in high-speed frequency trading, right? But basically, the SEC is not going to do a damn thing about it. Actually, this was an article from somebody who basically on his way out, he was in there for I guess it looks like about 30 years almost. maybe not quite, 25 years plus. And he says basically it's quoting, I don't want to really go over the article too much, but it basically says he said it's an agency that polices the broken windows on the bottom of the street level and rarely goes up into the penthouse floors. On rare occasions when enforcement does go to the penthouse, good manners are paramount. Tough enforcement, risky enforcement is subject to extensive negotiation and weakening. And that's like that with the IRS too. The IRS seems to go after smaller cases, and I hear you hear the higher profile cases, but they can be negotiated with, and the people that are actually doing the negotiation can be, I've heard things there. They get paid. They get paid. If you got the money, they'll pay them off. They pay them off, and if you're, it's like that with the SEC. It's like that with the IRS or any of these governmental agencies. Because the real power actually is on the top of Wall Street. Now, there's one thing about the alternative media that's really good, I could say, is that, the collective of all peoples, if all peoples were investing in physical commodities, like it could be gold, silver, I don't like gold too much, but I mean, say silver, platinum, palladium, palladium especially, or anything of that type that can be used as money, where it's actual physical goods, they do need you. They do need all these little people, because the collective of all these little people is really where they're skimming a piece of the action right off the top. And when they're doing a high frequency trading, when you don't partake in the system, the trouble is very few are doing this. I mean, you're not even talking about 1% of the people saying, I'm going to put like a good amount of my money in physical assets and the hell with this game. Very few people are actually doing that. Very, very few. And that's why it continues, and that's why Wall Street has the power. What's going to happen here, though, I can tell you that, we've had these various booms and bust cycles. First off, with the stock market, well, it kind of retracted here recently a little bit, and that was mainly due to the implosion in the tech sector. The tech sector really, had a major crash. So, like, if you see the overall market, it looked like it went down some, but the real area that had the crash was mainly in the tech sector. But I have to point this out with, equities and all these different things. Like some people are saying, yeah, the equities are running strong. And, you heard about some people in the alternative media saying it doesn't make sense how they're being pumped up. And it's all due to, yes, it's partly due to Fed action. But, if you look historically, equities have not really always been priced accordingly to what the underlying economy is. There have been many times, well, actually most of the time, the price of equities is fairly much detached between what the real economy is doing and what the markets are doing. There's been times when the real economy has been doing very, very good, and equities have stayed flat for like a decade and haven't done a damn thing. And there's been times where they got like totally detached, where equities were just going up, and the economy was falling apart. It's been that way. I mean, it's been that way for like basically 100 years. That's the way it's been. I mean, yeah, basically as long as the Federal Reserve has been around, but even before that, they're not always linked one to one. It's the kind of, equities are somewhat of a psychological type thing. People jump on it when, it keeps them hot and heavy moving into it because they see a curve going up. And they tend to jump in it, and that's going to be actually the theory with silver too. That'll hold up too. It'll get way beyond what its fundamental value is, even though it's fundamentally priced too low right now. When people start seeing the curve go up, they're going to start jumping on it, and they're going to say, "Oh, it's going up," and that's going to cause it to go even further than it should. And it will super spike, especially. It'll get way ahead of itself. If you look back at everything historically to happen with silver just takes off like a rocket sometimes unexpectedly. Now I've had this theory that it seems to go in 3-year waves. If you look back historically with silver and gold, 2005 was a peak around that time. 2008 was another peak. 2011 was a peak, and I'm figuring 2014 is a peak. There'll be a Probably a reset in 2015. I could be wrong about this because it's getting pretty far into 14. But in 2015 could be a reset because that was one of the things they're talking about with the 7-year cycle that happened in on a Hebrew calendar. 2001 was one time there was a crash. 2008 was a crash. September 29th of 2001, you were talking about September 9/11, and there was a crash in the markets then. There was September 29th, 2008, there was a crash in the markets then. The next time is in September 2015, which is fairly close to the day of the fourth blood moon, which has a lot to do with, prophecy and things like that, or astrology on Israel. That's where I'm thinking that silver may really go unexpectedly high in 2014, come way back down in 2015, not to anywhere near the levels it is now, and then really go hyperbolic in 2017, which is probably 2017, 2018, which may be the time a war is really cooking up with, Vladimir Putin or Russia or something like that, and that's where things may really get out of hand. You might see silver go up to extraordinary prices. I don't know if this is going to play out like that, but I do think it's going to play out like that, because if you do look at what happened in 2010, 2011, it only took about 7 months for silver to go from 18 to 47. It doesn't take that long. Once it starts going, it freaking takes off. What I think is actually going to happen is possibly, this thing with Ukraine is not exactly over with yet. There's still the Russian troops on the front with Ukraine, and there's still a policy where Putin is trying to balkanize or federalize, that's what he calls it, divide up Ukraine into different autonomous sections so it can be ruled piecemeal by the Kremlin. What I think is going on is he's going to do it either by threat of force or actually use force. And all these geopolitical tensions in Ukraine, if there's any force that happens there, I think it's going to be the time that the West and Israel is going to go after Syria and Iran. And all these geopolitical tensions are what's going to cause gold and silver to go way the hell up. I know there's been arguments about it was also fiscal policy in 1979 that caused silver and gold to go astronomically fast. But it was also during the Iran hostage crisis, and also during a time when there was an embargo against their oil. That was when Mark Rich was around trading oil anyway. By the way, I think one of the who was it? I forgot the guy's name. It was actually from Iran. He was one of the ones that was involved in the embassy taking over the U.S. Embassy in 1979 in the hostage crisis when he took over the American hostages in the embassy. Iran has actually appointed him as the ambassador to the UN. So it might be the first time that a UN ambassador might not be allowed to set foot in the United States if that's the case, because the U.S. might say, you can't come here, because of that incident that happened way back in 1979. And I don't know, but if you look at what happened in 1979, the price of gold, silver, oil went like that, like a rocket. It wasn't just due to underlying issues in the economy. It actually had a lot to do with the tensions in the Middle East, too. The price of oil and all this type of stuff. And if there's a war, if there's any type, I think it'll go way up. My word for this is super spike. It'll spike and come back down. And where it may ultimately really super spike up into the stratosphere where silver's going for $100 an ounce, maybe if there's actually a global war. I don't know if this is going to happen. I hope it don't happen. I'd rather just make money on silver and there be peace, you know what I mean? But that's maybe how it works out. It may actually work out that way. I'm not a doom and gloomer because I don't want doom and gloom. But that's maybe how it's going to work out. So, I've been harping on this. I think 2014 is going to be one of the spike years. It's going to come back down in 2015. And 2017 is going to be the ultimate time up. Now, this stuff with this high-frequency trading, it's actually getting in the news a lot more. And I just hope that people realize that the system is actually rigged against you. I know there's a lot of articles out there supporting it, that it's basically like the alien versus the predator. It's not really affecting the little guy. The little guy can freaking beat the big guy any day because they're more, they got their decision making could be small, in faster, smarter moves and stuff. They're not subjected to like they're not like a big ship or a jet ski and all that type of stuff. They could turn on a dime. But in actuality, high frequency trading, if they're making money on it, yes, you could say they're making money from other firms that are big, but those other firms won't be big long if they're losing out on the high frequency trading game. And I would suspect that anybody, and it's not a suspicion, this is common sense. If it's costing them X amount of dollars to do high frequency trading, they're delegating some of this activity to special high frequency trading firms, and you're losing out anyway, you wouldn't be paying these firms. So I think all the big guys are making out on this high frequency trading, and just from how it works is that they see ahead of time, where the trades are coming in, and they jump ahead of it. Now, of course, some of the big guys are doing better than the other big guys, but basically the ones that are really getting slaughtered are smaller investors, which is pretty much everybody out there who's retired, has a 401k, has any kind of instruments or annuities and insurance and all this type of stuff. People like this ought to be thinking about physical assets. It's one place they can't be playing this kind of game. Yes, they could be playing the game and say the spot price of silver is this and that and all that kind of garbage. But like I said, the only reason it can happen is because there's participation of millions and millions and millions of smaller people in the markets. In other words, if it was just left where it was only the big guys fighting each other, this would be a situation where the very smart outsmart themselves, and they'd be painting themselves into a corner, and it just would tumble down. It would tumble down. So, but the problem is most people do not want to think outside the system itself. And it's like you're not really outside the system, because things like physical silver, palladium, or things like that, or platinum and gold, and any other types of physical goods that you could actually invest in, even if it's artwork or something, or bronze work or statues or whatever, something that maybe have a long-term value due to maybe an antique value or that type of stuff, where if you're invested in this type of stuff, it's almost like you're setting aside, and it's something that is really not on the radar anywhere. I mean, you really don't have to say that, there's nothing that's actually reported to the IRS. If you got some paintings on your wall in your house that says they're worth so much money, and maybe they're worth more money or something like that now, there's nothing really reported to that stuff. It's not really like saying the IRS had this and that, you have this. These are all your assets and stuff like that. I mean, there's so many ways to actually have physical goods and just not playing the game. It's like when you're using the brokerage accounts, and I have to actually go back to some of the warnings from Ann Barnhart. I think she's a little bit, she is a, her I pretty much like, even though she's more extreme than the way I think. She's honest, in my opinion, 100% honest. It's like if you have your money wrapped up in these brokerage firms, I know MF Global did give all their money back, all the clients did get all their money back, but if there's ever a problem across the board with this whole damn thing, it's not going to happen that way. You're going to lose out what's ever in your brokerage firm. Now, I have money in brokerage firms too, but it's like it's not all my money. You know what I mean? It's not all my money. That's how I play it. And people are too lethargic. They're thinking the system's going to stay the same, exactly the same all the time, and they don't have any contingency plan. And that's exactly how I want to look. You should look at like the silver, the gold, the platinum, the palladium, and all that type of stuff. It's like a contingency plan. It's a what-if scenario. It's not something you put all your money into. Or actually, I think if you put most of your money into it at these current prices, even though Goldman Sachs and saying that the gold is going to have you in a bear market for the next so many years and all this kind of stuff, I'm not buying it because I'm not buying their theory. Not saying the gold. I'm not buying their theory because geopolitical events can change the landscape in a heartbeat extremely fast. And anything that happens in the Ukraine, which looks like it's not done with, anything that happens in Iran or Syria, which, looks like the situation is continuing on there, will change the whole landscape for gold in a second flat. In a second flat. So, that's where people are going to jump on because it's going up. The people where it's boring right today and they're holding on, or maybe they're accumulating a little more, or maybe they're just jumping into it right now at these current prices. They've never had any silver, gold, platinum, or palladium. They're going to do fine. They're going to do fine. It's not, you don't really have to hold it extremely long term because I think it could be in for a double this year easy. It could be very easily. Just remember, when it goes up very fast over a very short period of time, unexpectedly. And I just keep thinking back to the 3-year cycles. It seems to be playing out that way. And if you look at geopolitical tensions and the way things have happened in the past with gold, oil, silver, and platinum, palladium, it's geopolitical tensions can make these metals go up very fast, and the price of everything else may stay the same or even go down. So it's a smart investment. And you're also not allowing the ones that are participating in high frequency trading to use any of your resources, and I think that's a very important consideration too.